Hello and welcome to the demo of the best innovation in financial technology after the launch of FactSet. You will see how Trendrating is based on an extremely robust momentum model and how it supports a variety of key activities related to portfolio and fund management. We will see how the model works, and you will get a sense of how the model is designed to capture long-term trends both up and down. We will then move to the various functionalities supporting different tasks, such as portfolio analysis and optimization, and building up momentum strategies and portfolios that can then be used to optimize real portfolios. We will also go through the screening tool that makes it possible to identify interesting investment opportunities across the world. And then we will see the quick view, where you have a top-down overview about the strengths and weaknesses on momentum across countries and sectors. Finally, we will run through the alerts function, which gives a list of upgrades and downgrades in terms of momentum across portfolios, baskets, and the whole world on a daily basis. I'm going to start with security analysis, which is designed to analyze individual securities according to our momentum system. We rate momentum according to a very simple set of grades: A, B, C, and D. A stands for a very strong bull market, B is the beginning of a bull trend, C is the inception of a bear phase, and D is a strong bear trend. In the case of Apple, we see that Apple here is a solid A with a strong uptrend. The A rating was issued back in August 2013. Since it was rated, the stock has moved up 63%. In the chart, we see that before the A rating, we issued a B rating just a couple of weeks before, also in August 2013. The model has been quite effective at identifying the trend very early, but most importantly in maintaining the positive reading of the trend, even during phases of high volatility, fast retracements, and fast breakouts. If you scroll below, you see historically how the model works. The green line indicates when a positive A or B rating was issued, and you can see the model has been effective in capturing the bulk of the big uptrend, maintaining the positive rating despite fluctuations and market noise. On the downside, the system has also been effective in identifying major turning points and bear phases. As you can see here, this is identified by the orange and red lines associated to ratings C and D. I'll take another stock, Alcoa. Here we see a similar picture where the model is designed to capture trends relatively early and ride them across the various phases. It is interesting to see that Alcoa, for example, recently had a sharp correction, but according to the model, this was part of the whole uptrend, and the uptrend is still intact. Again, you will see how the model has been effective in capturing uptrends and to capture the key downtrends as well. I'm now going to show you how people use the model in practice. The most obvious way to use it is in analyzing individual portfolios. I will take this US portfolio I've made as an example, and I've used relatively large cap stocks. The picture that emerges here is quite troublesome, as I have 36% of my portfolio that's actually going down. Statistically speaking, we know that those will continue to go down for some time, so there will be a drag on performance. We need to fix this. The way to do so is by optimizing the portfolio based on our momentum model. We will now look at how the momentum model works with the actual portfolio. To do so, I will move to the index builder part of the tool. In the index builder, I select a basket of securities and I want to test a momentum strategy against the benchmark. I will start with the components of the S&P 100 as an example, and these are the 100 stocks that make up the index. The idea here is that I want to test the momentum strategy that I hold only A-rated stocks at any point in time. In doing so, I'm keeping only the winners in my portfolio and getting rid of the losers. I'm happy to say I have as many as 30 stocks in my portfolio at any point in time, and I decide to reshuffle my portfolio once a month. So once a month, I make sure that I change the allocation and components of my portfolio in order to have only winners. In other words, only stocks rated A. Now let's select the proper benchmark. Now the system will test the results of this strategy across 8 years, month by month, and we will see how it performs against the benchmark. It's important to note here that you should use as broad a universe as possible to optimize performance. For example, I've used the S&P 100, a basket of 100 stocks, and we suggest using at least 100 to 200 for optimal performance here. Now, in the results, we see the cumulative difference, the trend rating results, the benchmark, and the differential across 8 years, which is over 95%. On an annual basis, it's close to over 7%. There are other measures of risk as well. And we can then look at the chart, where here we see the green line, the trend rating strategy, and the blue line being the index itself. The model has been quite effective in managing the downtrend in 2008. To see why, we click Exposure, where we see the allocation back in 2008 and 9, where the model would have been underinvested. We had very few stocks satisfying the criteria of an A rating. In fact, only 3 were available at this time. This is how we saved money on the downside. It is also possible to check this data year by year, the contribution in terms of added value compared to the benchmark. Here, on average, as we said, is over 7%, and we can also look at this on a monthly basis. We can fine-tune these strategies as well. For example, I may be focused on stocks which are at least mid-cap, and I want to be more reactive, so I decide to reshuffle my portfolio once every week. I then also decide to include B-rated stocks. At the end of the day, B is still the beginning of a bull trend, so although it's a bit more risky, it might be worth it. What we see is that changing the strategy shows a slight improvement, a 7.3% positive differential across versus the index. We see a similar view on the chart as well, where the strategy probably has slightly higher volatility, and here you can see the numbers. Now let's say I'm happy with the strategy, so I save it as my preferred momentum US portfolio. I will use it later to improve the structure of my actual portfolio. In order to do so, I go to Portfolio Analysis and upload my actual current real US portfolio, and I see I have the same problem. 36% of stocks that are not good at all. I then move to the optimization function and I choose the strategy that I built just a few moments ago, which is my Momentum US portfolio, and the work is done for me. If I move toward the strategy, the benefit I have is I'm moving the overall momentum rating of my portfolio from a B rating, which is the weighted momentum of my existing holdings, to a solid A rating, which is exactly in line with the benchmark that I'm supposed to beat, being the S&P 100 itself. We now see a list of candidates to buy and the list of candidates to sell or reduce. I can now export this to Excel, or I can send it to my colleagues. Alternatively, I can simply execute the strategy. Another task that the system supports is screening. Let's assume I'm a fund manager investing in Western Europe, focusing on only large and mid-cap stocks. And if I'm looking for strong stocks, I'm going to select only those that have an A rating. What we get is a list of stocks in Europe that received an A rating according to trend rating in the past. If we look at the graphs, we see that some of them are quite old, some 2 years or older, with spectacular performance, and others are more recent. I can now save this list as my basket of good ideas and use it later for any additional analysis, either from a fundamental standpoint or any activity that I'm interested in performing at this stage. That's the bottom-up approach using the screening tool. The top-down is the quick view functionality. Here it is possible to have a view of momentum strength across countries and sectors in just a few seconds. For example, today India is great. It has a solid uptrend across all sectors that we follow. On the other hand, Brazil and Italy are quite a disaster, where we see mainly orange and red. For example, petroleum and oil in Spain is very bad. In India, however, the majority of stocks in petroleum and oil are moving up. This is an easy way to identify ways to switch portfolios and identify areas of interest depending on your strategy and needs. The last feature is alerts. Here, it is possible to see any change in momentum across portfolios, baskets, and the whole investment universe that we track. Upgrades is, of course, where we have a stock, index, or sector moving from negative momentum to positive. Downgrades is the opposite. If we look at upgrades across the globe today, for example, we have 45 stocks that received upgrades. Here are some of the interesting, fresh ideas that one may consider. The asset classes that we track are stocks, sectors, ETFs, including commodities and real estate ETFs, indices, and currencies. For any additional information, please refer to the Help tab, where you can find a full explanation of how best to use the full Index Builder functionality, and also more information about our indicators that estimate the upside potential during bull phases. Thank you for your attention.